We want to bring you some touch points in the market at the moment. Crude oil in after-hours trading still down about 1.7% to $83.61. And if you look at the sectors, we found very few green spots. The transports, and it isn't even by that much. If we look at the transports, they're up about, what I think, like 1/3% at the moment. Well, make it 0.5% to 15,329 for the Dow transports, and maybe the telecoms, a tiny bit of green here. Very, very tough to find any moves to the upside, even as the Dow is now down just 0.5% or 153 points after having been down more than 1,100 points. And speaking of down, after an absolutely atrocious weekend where $130 billion was vaporized off the cryptocurrency market, we are trying to see some green shoots at this hour. Bitcoin at the moment, slightly down, but some of its futures contracts are moving higher. And you got a major collapse, as we said, on Saturday. Sunday wasn't much better. The digital coin market is really struggling over the last 48 hours, with Bitcoin at one point dropping to nearly half of its record high of 69,000. Right now it's at 36,477, but it had fallen through the $33,000 floor. Ethereum still down about 6.6%. You've got Litecoin down 5%, XRP down 4.6%. What's going on in the crypto market? Here at a Fox Business exclusive, we have Bitwise Asset Management CIO Matt Hougan. Matt, what spooked the horses? And clearly, it isn't a flight to quality. It isn't sort of the safe haven that everybody kind of hoped it would be last year.
Well, one thing we know about crypto is that it's a risk-on asset. Anytime you see a violent shift from risk-on sentiment to risk-off sentiment in the broader market, crypto gets hit. It happened in March of 2020. It happened in the Q4 of 2018, the last time the Fed raised rates. Bitcoin was down 44% for that quarter. Importantly, after both those points, Bitcoin settled and then went on a significant bull run. Underneath the surface, the fundamentals of crypto are stronger than ever, but it is getting caught up in this broad-based shift to risk-off assets that hitting everything from Netflix to NASDAQ to, as you said, almost every sector of the stock market.
Well, yeah, it's moving in tandem with the stock market, which over the past several weeks has just shown that people are nervous. They're nervous about assets being repriced in a new Fed world where rates are going to go higher. But we also have Russia. Russia put out a cryptocurrency missive from the central bank there, and they don't like Bitcoin or Bitcoin mining. In fact, they may very well ban the trading of it. They won't ban that you can hold it, but that cannot be helping the situation. Russia equals 10% of the Bitcoin mining market, does it not? So when you're looking at the funds that you have at Bitwise, where do you see a real opportunity?
Well, that's a great question. We're actually relatively positive on Russia's development. Just like China's banning Bitcoin mining actually ended up helping the Bitcoin market, more sort of despotic regimes banning Bitcoin mining shows the power that Bitcoin has as a tool of economic freedom and the fundamental threat it offers because of that capability. So we see that as a positive. What we're more focused on the regulatory perspective is actually something happening here in the U.S. in February. The Biden administration is supposed to put out an executive order on crypto. I think the tone and tenor of that order could help either end this period of market volatility if it's slightly more bullish than the market expects, or extend it if it's more bearish than the market expects. The market's pricing in right now that that executive order will be very negative for crypto. So it's a little bit hard to see it surprising on the downside. I think the hope is that it sort of weighs economic competitiveness and some of the positive aspects of crypto. And that, to me, as I said, could mark, maybe the interstitial end of this period of volatility.
God bless you, Matt, for trying. I don't want to be insulting and say trying to spin it, because I know you actually believe this. But when you say that when Russia and China ban it, it's a positive, how's it a positive when Bitcoin was near 69,000 just several months ago? And on top of that, you hear everybody talking about this so-called Pikachu chart pattern. If you look at Pikachu, it's got the two pointy ears, and
right.
You're on the slide on both of those Pikachu ears.
Yeah, I'm not worried about cartoon name chart patterns right now. But what I do think is true, what you're pointing to, is that we're at a period of deep market volatility. I expect that market volatility to extend. I don't think we're at the end of it. I think if you look at things like funding rates or the shape of the futures curve, we haven't reached the point of peak bearish sentiment. So I don't want to paper over the fact that this is a significant pullback and a significant setback. I do think sort of despotic regimes banning Bitcoin broadly feeds into the narrative of why it's valuable to society. And we have seen the network sort of shrug off China's crypto mining ban as crypto mining moved to a more geographically dispersed location. So I will stick by saying that that's positive. I think we're going to exit this period of volatility and go on a significant bull run, but we definitely do have more work to do, and I'm not sure we've reached the maximum point of bearish sentiment. At least the indicators don't suggest that.
I have some pretty stunning news here. The NASDAQ just seconds ago, for a brief shining moment, turned positive, Matt. For a second, it was can we show an intraday, guys, so you can see when and where that happened? But it was literally a few seconds ago, which is quite a nifty trick, considering that at the low of the session, the NASDAQ was down. Right there, you could see it just a few seconds ago, popped up into the green, albeit very briefly. It had been down 674. This market action, Matt, as we look at it overall, what is it saying to you? I mean, you look at the bigger picture, do you not?
Right. Yeah, absolutely. I think the market doesn't know what to expect out of the Fed over the next 2 days or the next few months. That realizes the Fed's in this incredible bind where it needs to raise rates to tone down inflation, but it will weaken the economy, weaken asset prices, potentially roil the bond market if it moves too fast. So the market's having trouble figuring out which side will win in the tug of war going on at the Fed, and that's why you're seeing this kind of volatility. I honestly expect no big change out of the statement coming in a few days from the Fed. I think we're going to be a few months in this tug of war perspective, and I think the kind of volatility you're seeing is probably likely to continue as the market figures out and the Fed figures out what it's going to do in this extraordinarily difficult bind that it finds itself in. And can it perfectly execute a soft landing? I think there are a lot of people, myself included, who are skeptical that they'll do that with ease.
Matt, thank you very much on an extraordinarily busy day for not just equities, but definitely crypto as well. And by the way, you're looking at the VIX. It is up still about 8%. We are on track to close at a one-year high for that fear index. Keep in mind, though, the VIX has been up 5 sessions in a row, but we are well off the highs. So a little bit of that tightness and nervousness coming out of the markets. We were all over the crypto collapse on my Morning Market Minute on TikTok. We've got all your overnight headlines. Every morning I roll out of bed and immediately I just start, figuring out the most sort of big discussion here. Join the Claman Army. We're now 226,000 strong at Red Fox Liz on TikTok. In the meantime, Dow is still down about 220 points. The meme stocks really feeling the heat at this hour as investors gear up for this week's Fed meeting. Are the Reddit rebels going to wave their gold hands, right? Their diamond hands, paper hands? Which is it?